So what's the old saying? Ask and you shall receive. Well, a couple of you have been asking for a while for me to review some stocks that you all are interested in. And like the saying goes, ask and you shall receive. So mostly for my subscribers, the 100 plus of y'all, what's up? I picked out a couple of stocks that you all have recommended throughout the different months, and we're going to evaluate them. We're going to see are they good picks at this moment. For all of you who don't know, name is Michael EJ, Economic Stock Pickers, and let's get straight into these companies. So I chose three. I chose three companies to really focus on, and they've been mentioned maybe more than once, at least once, more than once, and also from the most loyal subscribers. So I'm focusing mainly on them. There's 3 to 5 that are always commenting on my videos and always paying attention. So it's mainly for you all. So the first one we're going to start with from a loyal subscriber is International Paper, ticker IP. And it's about a $24 billion market cap company, and they're in the paper packaging business. I mean, they offer various cardboard boxes. Apparently there's some very unique ways to package paper or package anything just in general. So yeah, I mean, this is a pretty sustainable business. And do they have competition? Yes, but a lot of it's smaller competition. A lot of it's more niche competition. When it comes to paper and other packaging, IP is kind of the leader. Now, what's also intriguing, I think why one of the subscribers pointed this company out, is that it's traded at a low valuation on an absolute basis. And that low valuation is like less than 10 times trailing earnings and like 1 time sales. Ridiculous, trading lower than the market. In today's market, trading lower than the market. That's when I get suspicious. Because if it's trading lower than the market today, it's probably justified. And I think so. Number of reasons. That includes, first of all, we got seasonality in the business. They see more business, of course, maybe at the tail ends of years, the calendar years, except in the middle. So that's something to keep up with. I've already mentioned the competition. They do have it a little bit more niche, but there are a couple of public companies out there and plenty of privates. There's hidden debt with these pension obligations, $13 billion worth of obligations to pay out over time. That's a little bit scary. You got M&A risk, integration risk. They kind of grow through M&A in some ways, some aspects, and it's accounted for. And it's not a company that does a ton, but been doing bigger M&A deals as of late. And also, there's some commodity pricing in there. You gotta consider, since you're dealing with timber, some lumber stuff, some different commodities out there. It's connected to all those things. So because of all of that, they're trading at kind of a low valuation. And also, so you got that part that's a little bit risky. So remember, companies trade at absolute low valuations because there's usually no growth prospects or even negative growth prospects, and or they're higher risk. And IP has a little bit of more risk to them, but they're also relatively low growth prospects. I mean, they've been producing approximately the same sales and the same profits 5 years going back. I mean, it's been almost like clockwork. Get to, around 20 billion or so in sales, maybe about 2 billion or so in profits, operating profits. That's been their game. That's been their game. Relatively capital intensive. There are some things I do like about the business, and I understand why equity researchers, sell side researchers like it. There's some things going on, especially in their industrial packaging business. That's 2/3 of the company, and that's where all the short-term growth is going to come from. Increasing research and development. Once again, there are many unique ways to package boxes and package products that I did not even think of until I saw this company. So that's one thing they're researching. And like I mentioned before, they got the M&A happening, so that's maybe a short-term boost from there. And I mean, they do have a little bit, just a little bit of strategic assets, you know. I mean, with all these different ways to package, there's certain companies that really need this. So, you know, there's a little bit of ecosystem benefit offering complementary products. Also, they do have a little bit of brand name recognition, so trademarks are a little bit thrown in there. But with all that said, and at 9 times earnings and 1 time sales, I think the stock's overvalued. It should be trading lower. The stock is worth, what, about, let's call it $55 a share right now. I think it should be closer to 40. So it's one of these examples of, it's because the company has a low valuation. It's low for a reason. It's probably justified. Don't be out here falling for value trap. Even with their, you know, decent dividend yield and all, it's not enough to make up for it. $55 now should be worth 40. All right, next up on the list from most loyal subscribers out there, it's FedEx, the shipping company, about $70 billion in market cap. And I mean, we already kind of know about them. I mean, we see them everywhere. There's probably one that's within 10 minutes of where you live right now. I know there's a couple near me here in Austin, Texas. What I found the most interesting though is their valuation compared to UPS. Now, you know, that's kind of like as close as you get in terms of competition in a lot of ways. I can explain how they're different, but one thing I found interesting is that they both trade like around 20 times trailing earnings, and also, you know, well, a little bit better for UPS on sales. Well, better for FedEx on sales. FedEx trades about 1.2 times, UPS at about 1.5. But those numbers make sense, and this is why. So first and foremost, I mean, UPS is the bigger company. They're about $100 billion market cap company, and they have a further reach. They're more international than FedEx, and they have better margins. So they should be trading at a higher price to sales ratio. So that makes sense. But even with that said, why are they trading at similar price to earnings? More importantly, why is FedEx beloved by the sell side with pretty much all buy ratings? I think it's like 21, 22 analysts. They all got a buy rating. on FedEx. Whereas, you know, UPS operates in pretty much the same space in some ways, and mainly a whole. So what's the difference between the two? Well, a major difference is, you know, this is why you really pay attention to how companies compete against each other. This is one of these classic examples. The main reason is FedEx has better growth opportunities, hands down, without a doubt, than UPS. But UPS is the safer company. Here is how. So, we both know they're both kind of known brand names. You know, they're pretty strong in that. Both have relationships with Amazon, so you know that the Amazon thing is not as much of a concern for them right now, especially for FedEx. And it's not that much of a concern for them right now. One interesting thing is that UPS they are more of a logistics company. So complex shipping problems that might include air and freight on the ground, or traveling maybe through train. They don't necessarily do that, but they can help with all these different things. If you're a larger company constantly shipping things and need help figuring out the logistics of doing so, UPS is your people. And that's what they do. It's a more complicated model. Larger businesses will need them, and it's a better model, at least from an economic sensitivity perspective. They're not as sensitive to the market or to the global economics, because global economy, because it's kind of needed. It's tougher to find that. FedEx takes a different approach, that they're more siloed. Each different group is siloed away from each other. They don't really intermingle. And the reason they do that is they're dealing more with small and mid-sized businesses and me and you, the consumer. So we care a little bit more about speed. We're not trying to solve any complex global problems out here. Logistics, I'm not having any troubles or any hassles doing so. Just give me my package as soon as you can, as soon as possible. FedEx has found that it's best to do that when you're taking a more focused approach. Let's silo all these different groups. Let's just try to be as fast as possible. And now FedEx, which is more US focused, is starting to branch out. They're starting to branch out and building more and more exposure outside of the U.S. I mean, they do have some in international markets, but it's starting to increase more and more. So that's where a lot of their growth is coming. Overall, relative to UPS, they are larger. Downside to that is that they're more established, right? So, it's a trade-off with that. And FedEx they're just on the come up. They're just coming up better. And I mean, mainly because of that, I actually think some of those equity researchers are underselling them. I mean, they see the stock worth $300 today, which I agree with them. Stock is worth about $300 today. It's trading at about 260. What I have around 265 right now. So I think it's worth $300 today. What's more important though is not what it's worth today to me, but what it's worth tomorrow based on growth prospects. I do see some decent growth prospects, so I see it as a broad range, anywhere from $300 to $330 to $350. That's how much the stock is worth possibly tomorrow. So that's the real range. That's where I see things coming. Now, important to note, they do have their earnings call coming up pretty shortly. Was it June 19th? So it'd be pretty interesting to hear things from there. But usually stocks don't really re-rate for me unless it's annual earnings calls, or I hear something that's just so different than what I thought about the company, which doesn't happen that often, right? So keep that in mind. FedEx, this is a good call from the subscribers. This is a good one. Buy FedEx, get into it now. I mean, I think it's relatively, I won't say safe from any economic downturn. They are more sensitive to it than UPS. I think both companies are a good buy, but I would choose FedEx because of the higher upside. All right, last one up. Union Pacific. Had a subscriber really ask about it, was really interested. I also had one or two people just offshoot talk about it, like even a hedge fund or two talk about it at my job. Union Pacific, I mean, railroad transport. I mean, they operate the railroads, I mean, nothing special about them, right? I mean, about what? $111 billion market cap, pretty large company. So pretty large company. And the first thing I noticed, since I'm, looking for justified valuations, I see the relatively high valuations for a company that I don't think is really growing, right? And I'm like, why? Why is this happening? I mean, they're trading at what, about 5.5 times sales, 25 times earnings for a company that's not growing. So, what gives? I'm sensing something's got to be up. And it's not like they don't have any competition either. There's other railroad companies out here. And one thing I did realize though is that it's kind of a high margin business. Now, I say high margins in this case, it doesn't necessarily transfer over to high quality. They're higher, it's better, it's good. I mean, these are 30+% operating margins here, but return on invested capital isn't that high because it's a railroad company. They got a lot of invested capital. There's a lot of assets there. I mean, that's so yeah, and on the income statement alone, it doesn't look that bad. But I mean, once you consider that aspect of it, like, hey, they got to reinvest a lot, and they don't really have any strategic assets. Where's the proprietary data? Where's the intellectual property? I mean, maybe a little bit of relationships, and I must admit, they do have some customer loyalty, which is really good if you're operating a B2B business. But I mean, it hasn't led to growth. I mean, relatively flat. I mean, up and down. Now, increases coming in the future? Maybe. But I don't see anything just exponentially happening. I mean, they're more focused on like agricultural products and other commodities. The others might be more focused on exporting certain goods, so leaving from the ports, or focus on metals or other commodities. So I mean, I get their niche, I get why it's there, but I don't know, UNP isn't that special to me. It doesn't just jump out. So I do think the valuation is relatively high for what the company does and the little growth prospects I see. With that being said though, if you already held UNP, I wouldn't sell it. there's a little bit of upside. There is a little bit of hope there. It's not like a complete get out of it, it's overvalued. It's just not really undervalued either. One key point though, I do always talk about, long term, the profits and the success, especially of a stock picker, is on the supply side, for business. If you look at the stocks, shareholder yield is where it's at with UNP. I mean, it's about at 5% right now. 3% comes from the dividend, 2% comes from the buyback. If you look further in past histories, the shareholder yield has gotten to like 6, 7, 8%, mainly because of buybacks, which is my favorite thing. I love the buybacks, so if UNP decides to buy back more stock, I would actually buy it. Probably only hold it for like a year or two, so I can truly see it work out, because that's about how long it takes for the yield to play out and it plays out in other ways too. But I mean, that's why I will buy UNP. Not necessarily because I believe in the company or they're just overvalued or my expectations for growth are just going to take off. I buy more for the buybacks, more for the dividend. If that's you, if you're that kind of investor, UNP is not a bad choice. That's all I got for you all today. I am sorry that it took me this long to create this video, but I do appreciate all my fans. I do appreciate all my subscribers. Thank you so much. And I am going to do more videos like this. There's Micron. I'm going to do a video on Micron by itself. That's an interesting topic. I haven't done one on marijuana yet, cannabis, the weed. I haven't done one on the weed yet, so I realize there's a lot more there than what I originally expected. And there's other topics too. There's other stocks out there as well. So please keep sending those suggestions. I will stay on top of it all and just continue to pump out more videos, especially videos that you're most interested in. Michael EJ here, and I'll see you in the next one. Peace.